Good afternoon, everyone. My name is Xiaoli Etienne. I'm Associate Professor of Agricultural Economics at the University of Idaho. I'm also the Idaho Wheat Commission Endowed Chair in Commodity Risk Management. In this talk, we will discuss the price trends for inputs used in agricultural production. So before we go to the input market, it's a good idea to take a look at the big picture, that is, the general price trend in the United States. So many of you, if not all, might have noticed that the food you buy, the gas you put in your car, the electronics and equipment you pay, and your dream vacation to Hawaii just got a lot more expensive. Well, that is inflation. So the whole economy in the United States is experiencing a crazy level of inflation. So the plot here is the consumer price index. And to give you a bit of historical perspective, it starts in 1990 and goes all the way to October this year. Okay? So in 1990, the price index to purchase a basket good is around 130. But in October this year, to buy the same basket of goods, you will pay close to 300, right? So more than doubled. So the inflation is particularly high this year. So in fact, in October 2021, the consumer price index has increased by over 6% compared with a year ago. And this is, in fact, the largest annual increases in consumer price index in about 3 decades. So these rising prices have affected all industries, and the agriculture sector is no exception. So the chart here shows the production costs for key crops grown in the region, barley and wheat, starting again from 1990. So the cost data are for the entire United States, which means that the specific number might be quite different from your farm business. But the overall trend should be similar. So as you can see in 2021, this past crop year, it cost about $460 per acre to produce barley. And in 1990, so it only cost around $155 per acre to produce barley. So over the past 3 decades, barley production cost has almost tripled, and this is considered higher than the increase in general inflation. So the situation is slightly better for wheat, but again, the cost to produce wheat has increased by 122% over the past 3 decades. Again, higher than the inflation. So you might ask a question, so why did the cost to produce agricultural products have increased so much? Right? So which input or inputs are driving all those increases? So is this because of high farmland prices? Or is this because of the machinery costs? Or perhaps it's the fertilizer prices causing all the trouble? Right? To answer this question, we need to take a look at the cost of each input used in our production. So if we summarize all the input items, on your enterprise budget, so we will start out with the total cost, which includes, variable cost, and this is a cost for items that varies by how much you produce. For instance, if you plant more wheat, you will need more fertilizer, more seeds, and those costs, changes as you plant more or less, crops. So they are considered the variable cost. So under variable cost, we have fertilizer, fuel, pesticides, chemicals, seeds, labor, and if you are a livestock producer, you also need to worry about the cost of feed. Okay, so on the other side of the diagram, we have fixed cost, and those are the costs for items such as machinery and land. So if you have one combine, it doesn't matter how much wheat you are producing, you will be still using that same combine, and they are considered the fixed cost. Okay, so for fixed input, mostly most of times we like to finance them, so you will need to worry about the interest cost and which is affected by the rate you got from your bank. So let's take a look at the fixed cost first, starting out with the interest rate. So interest rate has gone down quite a bit over the past few decades, and currently we have historically low interest rates. So the chart here on the right shows the interest rate for agricultural loans for both real estate and operating loans since 1985 to the second quarter of this year. So also shown are the 5-year moving average rate for both types of loans. So it's quite astonishing to see that the interest rates were in double digits back in the 80s, and now it's gone down to 3.5 or 3%. So it's a very incredible ride. So if we take a closer look at the interest rate for the last 3 years, the left chart, we can see the rates on operating loans, the dark blue line, reached a historical low level at the end of 2020. So although it increased slightly in 2021, it has remained at a historical low level. On the other hand, the average rate on farm real estate loans continue to decline, and it's currently at another historical low level in the second quarter of 2021. So overall, right, so the average cost of financing on all farm loans remained much lower than the recent average, and is substantially lower than any previous period on the record. Right, so this low interest rate has made purchasing more land and farm machinery quite affordable, but the problem is, in the meantime, farmland value has gone up quite a bit. So U.S. farmland value was less than $700 per acre in 1990, and in 2021 it's close to $3,500. So just last year alone, the average farmland value has increased by almost 7%. So the situation is quite similar in Idaho, the blue line, with the only exception in 2008 and 2009. So the farmland prices in Idaho has consistently on the upward trajectory. And coincidentally, in 2021, the average farmland value in Idaho is actually very close to the national average. So how does this compare to the rest of the nation? The chart here shows the average farmland value for each state in 2021. So the darker the color, the higher the prices. So compared to our neighbors, Washington, Oregon, Montana, Idaho's farmland value are higher, but still much lower compared to California and most of the Midwestern states. So last year, the farmland value in Idaho increased by 7.7%. So in our neighboring state, Washington, it has increased more than 10%. Okay. So of course, the price for farmland depends on the types of land you own. So here is a plot of prices for different types of land in Idaho. Prices for irrigated cropland are the highest and have increased more than any other types of land. So you might wonder, well, so the farmland prices have gone up so much. What about the cash rent? Surprisingly, although farmland prices are high, the cash rent rate has not increased nearly as much as the land itself. So here, this plot shows the average cash rent in the United States, so which was about $60 per acre back in late 1990s, and this year it's about $140 per acre. So compared to last year, the cash rent is almost the same, only increased by 1.4%. Okay, so the situation is a little bit different in Idaho. The average rent for cropland actually has increased by over 5%, but this is mostly driven by irrigated cropland, the gold line. Okay, so for non-irrigated and pasture land, there's a very little change, over time. So another item under fixed cost is the machinery ownership expenses. If you are making a big purchase on farm equipment, well, this may not be the best time to do that. So the machinery price index constructed by the USDA shows that in October 2021, machinery prices have increased by 14% compared to a year ago. So in fact, up to the end of last year, right, so machinery costs were quite stable. So the index basically fluctuated around 120 for almost 3 years. But starting from January this year, because of supply chain issues, so machinery costs have really gone up, and the index is at around 140 as of October 2021. So we have discussed the right side of the cost diagram, the fixed cost. So the general conclusion is that farmland and machinery have both become quite expensive, but the cost of purchasing this item and expand your farm operation have been partially offset by the lower interest rate. So in the end, if you are financing, the interest cost for your fixed input may have only contributed a small portion of your overall cost increase. So let's next take a look at the variable cost. We will start with the cost of fuel. So agricultural production in general is quite energy intensive, especially in the United States. So the direct energy used for agricultural production mostly draws from 3 types of energy sources. So the first is the petroleum-based fuels, such as gasoline, diesel, and liquefied propane. And those are mostly used to operate small vehicles like cars, pickup trucks, and diesel fuel is used to operate farm machinery like tractors, combines, mowers, etc. And also we use liquefied propane to power some small farm equipment, including the irrigation system. So natural gas is also mostly used for small farm equipment and also used in some customer operations. And the third type of fuel that's used in ag production is electricity, and it's usually used for lighting, heating and cooling in homes and barns, and for dairy producers, you need to use electricity to operate the milling system, to cool milk, and to boil the hot water for sanitation. Okay, so let's take a look at the petroleum-based fuels, which are refined from crude oil. So oil prices basically determines what your gasoline and diesel prices will be. So oil prices have risen, rising quite dramatically over the past year because of the rising demand from the recovery of the pandemic. Okay, so in November this year, oil prices were like above $80 per barrel. It has slightly declined over the past 2 weeks, but still considerably higher than the price level before the pandemic. So the U.S. Energy Information Administration, as well as the futures market, so both forecast that oil prices will be slightly lower in 2022 in the $60 to $70 range. But there are lots of uncertainties in this forecast. You can see the dashed green line, which is the upper and lower bounds of forecast, goes from $35 to over $100 per barrel. So really what means is that although the oil prices might go down in 2022, there's no guarantee. There's a lot of uncertainties out there. Okay, so the story in the oil market basically dictates the price behavior for diesel and gasoline. So we can see that the two fuel basically goes the price of the two fuels go hand in hand. Okay, so both fuel prices nationally were around in Rocky Mountain area were around $2 per gallon back before the pandemic. but it has gone above $3.50 per gallon in the second half of 2021. So let's next take a look at the natural gas prices. So the chart here shows the cash price for natural gas at Henry Hub, which is the benchmark location for natural gas produced in the United States. So natural gas prices have been in steady decline up to mid-2020, but since then it has risen, rising pretty dramatically. So as of November this year, natural gas prices were close to $6 per million BTU, so more than tripled from the price level in 2020. Okay. So going forward, the general consensus, from the U.S. Energy Information Administration and the market is that natural gas prices will go down, but again, this will be considerably higher than the pre-pandemic level. So another fuel cost matters for growers is the electricity cost. Okay, so for dairy producers, this matters a lot because you need to use electricity to do a lot of things for your business. Okay, so where you live definitely affects your electricity rate, but on average this year, most places have experienced higher electricity prices compared to last year. So the chart here shows the percentage change in electricity prices from August 2020 to August this year. So the darker the color, the higher the increase. So we can see in Idaho, the increase is relatively mild, about 3.4%. And this is no comparison to states like California and Louisiana, where the prices has increased by more than 12%. So looking at the electricity prices nationally, you might be also quite glad to learn that the electricity prices in Idaho is very low compared to the rest of the country. Okay, so in August this year, you are paying an average of 10.74 cents per kilowatts, and which is in the lower range compared to the rest of the nation. Right, so we have discussed the fuel prices. So obviously, fuel prices have gone up significantly in 2021. But going forward, we might see slightly lower oil prices, and as a result of that, lower diesel and gasoline prices. And we might also see lower natural gas prices. But for electricity prices, it's likely to remain similar compared to the level this year. So next, let's take a look at the fertilizer prices. So if we want to use one word to describe the fertilizer market, then many of you may be saying crazy or wild. Yes, indeed, fertilizer prices have been on a crazy, wild ride. So recall that we talked about natural gas prices have tripled this year. Same or even more dramatic run-ups have occurred to nitrogen fertilizers, which uses natural gas as the main input. So since the beginning of this year, the prices of nitrogen-based fertilizer, anhydrous, have gone from 20 cents per pound of nitrogen to over 80 cents per pound of nitrogen. And urea, UAN 28 and 32, all went up from about 40 cents per pound of nitrogen to either close to or above $1. Okay, so this is not a scenario unique to the United States. Farmers across the world are facing the same high fertilizer price problem. So much of the U.S. fertilizer demand is met by imports from other countries, right? So when China suspended fertilizer exports for the next 6 months to ensure there's enough fertilizer for domestic use, and Russia imposing restrictions on nitrogen and phosphate fertilizer export for again the next 6 months, and we also have sanctions on Belarus. So there's just a perfect storm all coming together that had made fertilizer prices go on such a dramatic ride. So the outlook is that fertilizer prices are expected to decline in summer 2022, but maybe only marginally. So we may see a drop in fertilizer prices because of lower natural gas prices, as well as China and Russia losing their export restrictions. But again, there's considerable upside and price risks. So to give you a feel of what this is going to do to your fertilizer cost, we calculate the per acre fertilizer cost for wheat and barley production using the enterprise budget developed by the University of Idaho Extension. So here we have a soft white winter wheat in northern Idaho. So this crop year in 2021, your fertilizer cost averages around $60 per acre. So this is based on the recommended 90 pounds of nitrogen, 30 pounds of phosphorus, and 10 pounds of sulfur. So your specific application might be different depending on your soil test, but this amount may be typical for many growers. So with a 43 cents per pound for nitrogen, you are looking at $39 for nitrogen fertilizer, and $18 for phosphorus, and $4 for sulfur. So assume an average price of $10 per bushel. The wheat price was quite high, this summer, and a yield of 90 bushels per acre. So which might be, which obviously is an overestimate because of the bad, crop condition this year. So the fertilizer cost is, a relatively minor proportion of your total sales revenue. Okay, so now for the 2022 harvest, so we assume the fertilizer prices all doubled. So nitrogen increased to 85 cents, phosphate, sulfur, and the total cost of fertilizer combined, they all doubled. And this, for fertilizer alone, you are looking at over $120 per acre of cost. So, so what does it mean to your net return? Well, unless you can get a higher price for wheat or consider a higher yield, then we might be looking at a lower profit level for your production in 2022. So a very similar story goes to barley, right? So in 2021, right, so we are looking at basically a $47 cost for fertilizer, but this will double to close to $94 per acre in 2022 crop year. Okay, so again, unless we see a dramatic increase in barley prices or higher yield, it's likely that producers will be facing a lower profit margin in 2022. So given this crazy market, what can you do, right? So a couple of recommendations based on my reading. Right, so number one, you want to talk to your fertilizer suppliers. So communication is key. Right, so number two, you want to do soil testing to figure out the optimal level of optimal amount of fertilizer to be applied. So you do not want to apply fertilizer since the fertilizer prices are so high. Right, so the good news is, for chemicals, right, so the price has been, relatively stable or declining over the past few years. So we only see, 1 to 2% increase over the past year, so which is, considerably less than the fertilizer. Okay, so for seeds and plants, basically there's virtually no change in prices in 2021. So another item under variable cost is the labor, right? So, so the blue line shows the non-farm wage, across the United States, and the black line is the farm wage. And we can see that, farm wage has been consistently lower than non-farm wage. But then in 2021, so the farm wage has increased by close to 6%, while the non-farm wage has only increased by 4.5%. So the farm labor wage in Idaho is quite different from the national average. So the gold line here plots the average, farm wage in Idaho, Montana, and Wyoming. So we can see that, in 2021, it has only increased, 1.3% in those three states, and which is considerably lower than the national average. Right, so to sum up, right, so we take a look at the fertilizer prices. Fertilizer prices have gone up quite significantly, but we might be looking at slightly lower prices after summer 2022. And there's only minor increase or no change in chemicals, seeds, and labor cost. And we expect those costs to remain quite similar in 2022. So the last item on this, under this input cost diagram is the feed cost. Okay, so let's take a look at that next. So the plot here shows the price of corn in the United States from 1990 to October this year. So the bottom line is that the corn prices have been low for the past, for the 5 years before the pandemic. But since the beginning of this year, the corn prices have really, gone up. And in August this year, the price of corn is, has more than doubled the price at the same time, in 2020. Okay? So corn prices have gone down a little bit over the past few weeks, and right now it's at around $5.50 per bushel range. So for soybean meal prices, so we can see that it's very similar behavior to corn. Okay, so we see a dramatic run up at the beginning of this year, and in May 2021, soybean meal prices were 46% higher than the price level in May 2020, but has declined quite significantly over the past few months. And we can see that in October 2021, the price is actually 11% lower than the same time last year. So for hay prices, in the U.S., right? So we see the price of hay has been rising since 2017, but the rise has been quite significant since the beginning of this year. So October 2021 price of hay is 22% higher compared to October last year. And the increase is even more significant in Idaho, where we see that the October prices this year is 44% higher than the same time in 2020. And the hay price in Idaho is also a lot more volatile over time. So the largest component in the cost of producing livestock and livestock products is feed. So here we are plotting the feed price ratio, which is basically computed as the price of output divided by the price of feed. So the higher the ratio, the higher profitability that that the industry is facing. So we can see that the feed ratio has been relatively stable for milk, okay, over the past 3 decades. But over the past year, we do see a weakening market, that the feed price ratio has been declining, but we do see the ratio has gone up a little bit over the past few months. So similar story goes to steer and heifer, which corresponds to the left axis, but we do see a lot more variability in the feed price ratio for steer and heifer. All right, so feed costs. So the story is basically that most of the feed prices have gone up significantly, but there's some optimism going into 2022 that we might see lower feed prices. That's good news, definitely good news for livestock producers. All right, so now going back to the big picture question that we asked at the beginning of the presentation. So why did the production cost for agriculture has increased so much, right? So having examined all the cost items, So we know that feed prices have increased a lot, so does the fertilizer prices and the fuel prices. So the bottom line is those three items have contributed the significant portion of the cost increase in agriculture production we see over the past few years. So what's the projection for going into the 2022 crop year, right? So here the USDA Economic Research Service computed the national average production cost for barley and wheat. So here we see that in 2022, the forecasted production cost for barley is $460 per acre, which is slightly higher than the 2021 production cost. And for wheat, the cost of production was slightly increased from $331 per acre to $334 in 2022. All right, so with that, thank you for your attention, and I will be happy to answer any questions you might have.